Anil Rai Gupta, who's now here with us on the channel. Thank you so much, Mr. Gupta. Happy New Year. Talking to you a day after the earnings have been reported, where we've seen that 7% decline in the quarterly profit. The question therefore the street has, if your profits are falling because of rising inflation, because of rising input costs, are you going to pass that burden on to the consumer? Can we expect more price hikes from the company?
There are a couple of segments where the energy ratings have changed from the 1st of January for fans and air conditioners. So we will be seeing a price hike there. There has been some upward movement in the commodities like copper, aluminum, steel in the last few weeks. So we are seeing the effect of that. If it continues to stay above, then there might be some price increases in the other segments as well.
There's a confirmation coming in from the top boss of Havels that there will be a price hike. But Mr. Gupta, how big a price hike? Can you quantify? What kind of quantum is being looked at?
Not at this point of time, because as I said, it has been a few weeks phenomena only. So there is volatility around. So we are watching it for the next few weeks.
Mr. Gupta, what has been ailing demand in the B2C segment? And in your view, when can we see a rebound?
I believe we attribute this to, the inflationary trend. I think there has been some slowdown in the purchases. People have delayed their purchases. The unprecedented inflation which happened in the last 1 year in commodities is affecting this. And hopefully, we were expecting this to start coming down a bit. But as I said, things are volatile right now. So, we are actually enthused by the fact that the real estate demand continues to do well. So there could be some delay in the purchasing, and possibly, it should start seeing some revival in the coming quarters.
Now, sequentially, margins as well have seen an impact, and they have been aided by the stability in raw material prices. Can we expect your margins then to go back to those previous levels in Q4?
No, I think we'll attempt to maintain our margins. Though, as I said, there is volatility, which could impact some amount of demand margins as well. But I do believe that we'll try and recover or maintain our margins.
If I could direct your attention now to Lloyd's, that was, of course, the big acquisition that was done a few years ago by Havels. The point is that overall, still negative at an EBIT level. When is this going to normalize?
There is positive thing around Lloyd that the market share gains are happening. The sales growth is robust. The margins will continue to improve. As we said that we have high cost inventory in the third and the fourth quarter. So over a period of time, we'll see margins also improve. But we are also, very focused on the fact that we'll continue to invest in brand building as well as distribution enhancement. So those investments are being made. But on the positive, on the contribution side, we believe that we'll be continuing to expand margins.
Well, it's, still freezing in Delhi. So I cannot believe I'm going to be talking to you about air conditioners, but that's what markets do. They look ahead, right? So in winter season, we talk about summer as well. What is your expectation from the boiling hot summer season, which we will be, entering in May and June? What kind of demand will you expect from ACs, fans? How is production being ramped up?
Well, I think we are looking ahead at a positive season. The channel inventories are at a normalized level. So starting February, March, we should expect a good season coming in this year. Last year was the first season after 2 years of COVID, so which was good. And we hope to have a good season in the coming quarter as well.
The update on your lighting business, because that after a few quarters of contraction seems to have stabilized in terms of margins. Do you think that these margins look sustainable?
In fact, I think lighting is one of our very strong performing businesses. If you see the contribution margins or the gross margins in lighting are quite stable. Even in this quarter, it's around 30%. So when you talk about the contraction, that's the EBIT number, and again, it can be looked at as a quarter number because there are product launches during the Diwali season and higher advertising spends also. But over the year, it pans out. So lighting margins continue to be very healthy for the company.
Okay, continue to look healthy. What about the upcoming capex plans? When do you, when can we expect your plants to become operational?
Well, there is a capex facility coming up, conditioners in south of India, and also a cables and wires facility in south of India. Those major capex are happening right now. So this year, our total capex for the entire year will be around 700 crores.
All right, that's the view coming in on Havels across the board, talking about their quarterly performance as well as what the growth drivers are going to be. Havels